Welcome to Upticks. I'm Jake Falcon, the founder of Falcon Wealth Advisors and your host of Upticks. Today is our 99th episode, Lowering Your Taxes. All right, so I'm back on the show solo this week. Corey is back in his office, hopefully making the markets go up. It's our Wayne Gretzky episode, 99. I'm not a big hockey guy, but one thing I do know is that Wayne Gretzky's jersey number was 99. I don't know if there was any significance to that, but that number's always stuck with me for whatever reason. For today's show, I wanted to talk about ways to lower your taxes. In particular, I wanted to go over one strategy that not only can help you potentially lower your taxes, you can also do some good by giving to charities. And obviously with everything going on, with the horrible pandemic and everything else that's been going on in America, giving to charity might be a way to help you feel like you're doing something to contribute to society. So again, before we dive into today's show, I hope all of you are staying healthy and safe. And looking forward to this horrible pandemic at some time passing. Okay, so to get into it, first, as an effort of disclosure, my compliance likes me to disclose things. I am not a tax advisor, I'm not a CPA, nor do I try to play one. I do tax planning though, and we do use strategies to help potentially lower our clients' tax bills. We always want to work closely with your CPA and help make sure that we're doing the most that we can to keep that tax bill as low as possible. We don't have accountants in-house at Falcon Wealth Advisors. I have toyed around with the idea. The issue that still kind of comes up to the surface is that's a conflict of interest. I like working with outside professionals because I get a completely different viewpoint on the world, and it actually helps us, in my opinion, give better service and better advice to our clients when we're working with an accountant who's used to working with different types of clients in all different shapes and forms, work with outside estate planning attorneys, and then of course we're wealth advisors. Okay, so let's get right into it. So the strategy that I'm talking about today is I want to discuss what donor advised funds are, or commonly referred to as DAFs. And you can think of a donor advised fund as just another account, just like you may have an IRA or a trust account or a Roth IRA. A donor advised fund is just another type of account that you could open through a financial advisor or directly with a bank or an institution. And the reason people use donor advised funds is that you can put money into a fund and potentially receive a charitable deduction off of your taxes in that year without having to necessarily give all that money to charity. And the reason donor advised funds have become more popular is that the IRS has raised the standard tax deduction, meaning you have to give, I think it's around $12,000, plus or minus for an individual, and over $24,000 for a married couple, which means if you're not deducting more than $24,000 off of your taxes and you're married, then there's nothing to deduct. You can't do anything. And so what people do is they may put $10, $20, $30, $40, $50,000 in these donor advised funds in 1 year, and then slowly give that money out to charity over several years. Which, in that 1 year that they do that, if they get over the standard deduction, they do potentially get to write off some of their deductions off their taxes without having to write a big check to the charity in that year. So again, that's a real basic understanding of donor advised funds. We certainly do them at Falcon Wealth Advisors. We talk about them all the time, and I think they're a really good vehicle. So now that I've explained basically what one is, who should be using one? Because I don't think that everybody should be using one. The people that I think benefit the most are people that have concentrated stock outside of a retirement account. Again, if you have money in your 401k or an IRA or even a Roth IRA, it doesn't make sense to pull money out of those accounts and put them into a donor advised fund because you're typically just generating a taxable income, which doesn't really make sense. And then the Roth is tax-free anyway. So I guess you theoretically could pull from a Roth to put into it. But again, that's getting into the weeds a little bit and something we'd want to run by your CPA. Who it does make a lot of sense for those, if you have stock that's appreciated, not in a retirement account, by contributing that stock to a donor advised fund, you actually also could potentially avoid paying any capital gains taxes if and when you decide to sell that stock. So not only do you potentially get a deducted from your taxes, you also don't pay any realized capital gains, which to me is a double benefit of using the donor advised fund. So that's probably the best scenario. Also, if you're in a high tax bracket and you want to lower that, so typically for people that are still working, normally a retiree, if you're in a lower bracket and you don't have a lot of appreciated stock outside of an IRA, these donor advised funds might not make the most sense to use. They could, certainly. Certainly if you inherit something, or again, you've got a big tax issue that you want to offset, definitely a donor advised fund could be beneficial. Something important to remember though, when you do give money into this donor advised fund, it's typically an irrevocable gift, meaning you can't pull it back out for your personal use. So you want to make sure any money you put in there that you're going to use for charitable purposes. And that typically means donating to a 501c3 company. And also it typically means you can't get anything in exchange for it. You can't buy tickets with it or whatnot. So there are certain restrictions or rules that apply that we'll certainly go over with you if you are interested. But that's who should be using it. So again, if you're in a high tax bracket, or if you have appreciated stock outside of an IRA, I think those are people. And obviously you need to be charitably inclined. If you don't have large charitable intentions, then it's fine. Donor advised fund probably doesn't make sense for you. But if you are giving to your church or a charity every year and you are still working, it might make sense to take a look at using a donor advised fund to potentially lower your taxes. Again, I want to be very full here with the disclosure. I'm not a tax advisor, so we understand the way the vehicles work. We open up the accounts, we invest the money, we coordinate it with your financial plan. We will bring in a CPA just to make sure that we're getting the max benefit out of it when you're looking at making contributions into the donor advised fund itself. So again, that's one strategy out there. Tax season's fast approaching. It's probably a little late to do anything for 2019, obviously, but we're still in 2020. So you certainly can open up a donor advised fund now to potentially help your tax situation for this year for when you file next year. So again, it's probably a little late to do anything for 2019, but for 2020, there's certainly time left. If you got a tax issue, if you got some stock that's appreciated, certainly reach out to me. Send me an email at jake@falconwealthadvisors.com, and we're happy to set up a time to talk and crunch the numbers for you, and certainly work with your CPA to discuss. All right, good. For my fun topics, I don't have a lot. I mean, again, it's still business as usual. You can see I got a haircut, which has been really nice. I've been working a lot, spending time with Rachel. We've been doing a lot of projects around the house, which has been fun. Hanging out with our favorite pooch Einstein, and I've been pretty fortunate. I've been able to play some golf. Still completely try to respect social distancing. I find it interesting that there's a second wave coming, and unfortunately now it's hitting the younger people, and I think it's because perhaps they're being a little reckless. So we'll see how that goes in there. Hopefully it's not too severe and we get through this. Two things that I'm looking out for the most: obviously I'd love to see a vaccine, and then I'd love for us to get through this election. Thinking about bringing somebody from my research and trading department on our next show so that we can talk about what we're looking at for the third quarter. So make sure you take a look at our next episode, which will actually be episode 100 of Upticks. I'm really excited to celebrate that. In the meantime, if you are out there on social media, feel free to connect with me. I'm out there on Instagram, Facebook, LinkedIn, and Twitter. And if you're watching this on YouTube, thank you so much for tuning in. Please make sure that you subscribe so that you don't miss an episode of Upticks. Also, if you're listening to this on your favorite podcast platform, thank you so much. We appreciate any positive feedback that we can receive, and a 5-star ranking or a thumbs up button is again much appreciated. Like always, thank you all so much for tuning in, and we hope you have a great week.